G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Alright, let's go. So the topic for this video is Bitcoin versus the altcoin market and where we see things heading. Some predictions for the end of the year. See where things are going and what the events unfolding, and also some factors that could sway the markets in one direction versus another. And yep, we'll firstly jump into the fear and greed index. We are now at neutral from the fear and greed index. Yesterday and the day before, a little bit less. We dipped down to approximately 25 for a couple of days, and then we're sort of starting to shoot back right back up to 52, which is a mid-level. And yeah, looking very, very quick sort of recovery. And I'll show you the price of Bitcoin later on. But yeah, you can see we're sort of coming out of this trough here, which was sort of in for a while. So 5th July, we started it, 29, 6, 29, 28, 27, 29. And then we just shoot back up, right back up to where we were approximately start of the month. So really not much changed. But yeah, really sort of gives you an idea, based on like social metrics and many other metrics that make up this indicator. So it says here 25% volatility, also measures market momentum and volume, and 15% social media, and 15% surveys. Also the dominance, 10% of coins, especially for Bitcoin dominance, and the trends, basically putting Google Trends in there as well. So 10% of that is made up of search data, which is quite interesting. Mainly the sort of search trends for what the title of Bitcoin, because that represents the whole entire market and most commonly known to people in the space. So yeah, we're seeing it come back up again. Also, tweet by Vivek. Global liquidity index reflects Bitcoin's price. We're about to go parabolic, according to the global liquidity index. And you can see, if I just zoom in, so from 2000, we had this tech bubble. It came down. So we had the long-term cycle in the global liquidity, and sort of global liquidity sort of spiked up before the long-term cycle, and we had a peak. And we sort of peaked right before the long-term cycle did. And then we were up here for a while, then we crashed back down. It led it again. So liquidity led this move down, going along with the cycle. And then it shot up before the long-term cycle did. Liquidity up there for quite a while. And then it shot down right before the long-term cycle did. And then we traded sort of choppiness, went down. And then it shot up before the long-term cycle, and then we got in line with it. As long-term cycle went a little bit higher, we went down, and so did liquidity. We peaked up. So there's some variances where it goes up and the cycle goes down, so it's not perfect. And then we had the long-term cycle shoot up, as along with liquidity, and 2021, and we had the crash, of course, and that went really correlated with the long-term cycle. And now we're on track with it again. Will it follow it to a T? And we peak later in, like later to 2025 into 2026, or will it be extended or shortened? And we don't know, but it looks like it's pretty messy. But you can see how it sort of tracks it with where the liquidity is going, which is very interesting to look at. Just another metric from the Financial Times. And this is a 65-month cycle, okay, which occurs over time. It just probably goes back further than this, but it's giving us a rough idea of where we look like we are tracking the heading on to. We'll have to see for that one. All right, now next tweet is by Benjamin Cohen. In 2013, Bitcoin found a local low on July 5th, So far, the same thing has happened in 2024. If this is to be a left translated peak, Bitcoin will quickly reclaim the bull market support band and hold it as support over the next 1 to 2 months. Then it will rally into Q4. If this is a more traditional cycle with a peak in Q4 of the post-halving year, which is next year, which it should peak, like every other cycle has done prior, then it should take Bitcoin longer to reclaim the bull market support band. So it'll stay below it for longer. Regardless of the outcomes this year with regards to price, my guess is that Bitcoin dominance rallies hard in Q4 and peaks around 60%. So he's talking about Q4 this year. The reason why I continue to harp on about dominance is because Bitcoin is lower risk than other cryptocurrencies, but likely to continue to give better returns than most, but not all of them, at least until the Fed pivots. I keep talking about the Fed and that pivoting point when they go from QT to QE, so quantitative tightening to quantitative easing, when they go from reducing their balance sheet of the securities holdings and bonds to increasing it, that's when the time will shift. And I think a lot of money will start flowing from Bitcoin to the altcoins. This chart demonstrates that. So 2013, you had it drop below this bull market support band, this red and green band, and then straight away, boom, in, down, and then straight back up. Barely a week below it. It's green band, and then straight back up, and then we had that blow off top in the post-halving year. Having the same thing happen here in 24, and we're below it, but we are below this bull market support band for quite about a week now. This is like a couple of days, so we really haven't reclaimed it quick enough compared to 2013. It's looking a little bit more like 2019, the middle here, where it got stuck below it for a bit longer before coming up and retesting it, and then ultimately shooting right down. Okay, so you could track more in line with what happened in 2019. They cut rates. And yeah, we had some interesting economic activity during that time. And then we go down, there's another interesting chart. If you look at the Bitcoin 2-week RSI, we are near a critical level that should help us separate whether Bitcoin follows 2013 and 2016, where we found support around these levels, or in 2019, where we fell through and had an intermediate downtrend in the middle of a larger uptrend. So we broke up, it came down, this arrow, and then we basically had this 2013, so pre-halving. Sorry, this was the post-halving year, the first peak, went down the RSI, we shot back up. We had the second peak, which marked it, and then we came down right through it. This is the same thing. So came up, came down, after we broke through this line, came down in 2016, then we shot back up, and we peaked right this top, this descending line, right? So we peaked here, 2011, 13, 17. We had a break above this line, like we did before. But guess what? We fell below it. We didn't actually retest it like we did here and here, 2013 and 2016. So it didn't happen in 2019. We just shot right back down. And then we had the blow off top. We had the first top, right, in 2021. And the second one was a lower high. So we had a bit of divergence there, momentum. Right, we've come through this line again in 2023 and 2024. So we had peak in 2024, March, and now we've come back down to this line again, this support line, it seems. Will we bounce off it and head higher to this blow off top, similar to we did in 2013, or like 2016, where we sort of chopped around a little bit and then shot up, or we do what we did in 2019 and then just break down. So quite interesting there, illustration. And I'll talk about the dollar index closed Friday at its lowest level since March. All right, so March, before it sort of traded, so it's been trading sideways a bit. I saw its support at the moment, waiting to see what happens there. And this guy says in the comments, it looks like the Fed might flip a coin soon and lower the rates. If that happens, then we can see definitely the dollar declining against other currencies. If they keep rates higher for longer, guess what? The dollar goes higher. Simple as that. Okay, so we're in the charts, and first chart I wanted to pull up was the DXY, the dollar index, like we just mentioned on Twitter, and it looks like it broke this level of support, but we are quickly coming back up to reclaim. So this could be just a little weak, basically a fake out down, and then a shoot back up. Looks like it's not a proper break, in my opinion, this ascending triangle. It should really bring us down to the bottom of the triangle, but I believe this could be just a fake down support. And if this does break, then definitively and stay below and then just break, we're probably heading down to 102 and then eventually down to 100 around that area. Or we come back up and we break out. Depending on the Fed, the Federal Reserve, it'll be interesting to see what they do with rates and with inflation going forward and unemployment. They'll really shift the dollar in terms of where we're heading. And if we do shoot higher, that will be really, really, really nasty for the stock market, in my opinion, as it'd be a risk-off signal. More dollars, and the Treasury should go up as well. 10-year Treasury yields will spell risk off in the markets, and crypto as well. So I have to wait and see there. USDT dominance. We're coming down with this big Bitcoin pump. We're basically just retesting this line that I've drawn out, which goes back a bit of a fair way, guys. It goes back to here, 2020, touches it again, 2021, 2022, and we wicked over it, and we closed a little bit over it, and then we went down. But on a weekly closing basis, didn't close above it, and they had sort of chopped around here, broke it, and made a higher high. Now we're coming down to test, because as you can zoom out and have a look, you can see these arrows here. Every time we've touched this line, have a bounce. So quite interesting there. Bounce, 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 and we're bouncing again. So the top in March for Bitcoin is we're getting a bit of a slowly chop, higher, a bit of a slow trend up, which I think is not looking bullish. We also have the Bitcoin dominance in a strong uptrend, going back from when the Fed entered QT. We've trended upwards. Okay, so that won't change for me until the Fed cut rates. That'll be very, very telling to see what happens there. And also, we have to break this line, okay? This support line, if I zoom in. It's a bit rough, I understand that, but it's just based on these levels here. Okay, that one there, that touch there, we had a touch, So it's just the best fit line. It's not the most perfect line. Touch there as well, and we had some wicks here. So these ones were just deviations, these two peaks. If you go on the weekly, it gives you a better demonstration of why I drawn this line. So you can see that it looks a little bit neater on the weekly. So I need to break this line, right? And then retest on the weekly, and then come down to really suggest that we're in alt season. I don't see that happening quite yet until the Fed pivot and they reduce. So go from reducing their balance sheet to increasing their balance sheet. Okay, so I'll quickly show you that. All right. So if I go back, I'll just click on this one. As you can see, if I go back a little bit more, go back to the previous cycle, top. So before that was a flat. Okay, the balance sheet was getting increased as the dominance was going down. You can see it was trade sideways with the balance sheet, and then balance sheet, and then it went boom straight down because because the Fed was holding steady with their balance sheet. There was no volatility. They were staying steady. They were staying the course until they definitively reduced the balance sheet, which I've marked here, Fed QT, which means they reduced from that point on. And what happened to Bitcoin dominance? It bottomed and it went to its peak here, okay? And then green, I've got marked here, Fed QE. What happens? Bitcoin dominance went down. And then we had this shakeout at the end of the year. It tricked a lot of people off. The altcoins were not going to outperform Bitcoin. Bitcoin started shooting really higher, which is very, very unusual. And then this fake out happened, and then ultimately, because we're still in QE, okay, so the balance sheet's still rising. Okay, it's still going up. Righto. And guess what happened to dominance? We had alt season. Alts outperformed Bitcoin. QT happened right before. They pretty much announced it in late January, had a Fed meeting saying that we're going to reduce their holdings in March. So around here. And once they reduced and QT arrived, what happened to Bitcoin dominance? It goes up, okay? So these things repeat, okay? It's sort of cycles. It's predicting when it's not going to be exact. It's not going to be perfect, okay? Here sort of didn't really mark the exact bottom because we didn't really turn over until a few months later. But it gives you a rough idea of what's going to happen and where the risk is leading towards, which is in this case Bitcoin is lower risk compared to the rest of the altcoin market. So we can see that Bitcoin's outperformed the majority of altcoins on this move up higher. And now we're seeing it sort of starting to break up again as it's been consolidating for quite a long time over the past this resistance area since April 1 to now. So 3 months of just trading sideways, and now I think it's going to make its big move up going into the end of the year, as Benjamin Cohen, I mentioned in a tweet, he suggested, and I agree with him. That's in line with the balance sheet, but at the end of the day, it's much to do with the interest rates, okay? The US interest rates. And we've seen that they raised rates here, went to restrictive mode, and the Bitcoin dominance went higher as well, okay? And we also, after the first rate cut, as things weren't looking good, they were signaling that there could be potential weakness. We didn't really expect this big drop down here in the markets, but this first cut was a sign of money. It was sort of getting ready to rotate, because no one predicted this pandemic drop. All right, this drop here was unpredictable, but the easing started because the balance sheet got increased and the cut happened. So the market saw that as risk off, essentially, and the money started flowing Bitcoin to the altcoin market. And we had this move here after the first rate cut. Okay, so even if the rates go up, okay, dominance goes down. It doesn't really matter. It's the reason for why they're raising rates or why they're cutting rates is the most important thing. And in this case was QE. And this was really going into QT when they raised rates high enough to really weaken the market. And then, alts bled to Bitcoin because the rates were going higher. And then we had a cut, and then the easing happened, and then the Bitcoin to altcoins, okay? So we have that idea. And the cuts could happen, and could happen again. And then Bitcoin keeps rallying into early 2025, and then boom, into late year, alt season. This is where I'm predicting to be Q4 of the post-halving year. And then we have others, Bitcoin, which is tagged this trend line. There's arrows, as you can see. So going back to here, December, early 2017, late 2016, touched it here. I'll just remove the interest rates real quick. And it's the same story. We peaked right around when the Fed went to QT. Okay, and went down. We rallied because we had a flat balance sheet. Righto, so you had a flat balance sheet. This went higher. It suggested risk on. We bottomed here. All right, QE happens. What happened to the balance sheet? We bottomed. Right, others dominance bottomed. We shot right higher until the Fed pivoted, and guess what? It went down as well. Okay, so it's very similar. It's pretty much, it's not exactly, but it's the inverse of what Bitcoin dominance does. Okay, and then we can go to a quick chart. This chart here is pretty much the Bitcoin dominance flipped upside down. As you can see, it looks like to me it's going to head lower down to this 0.25 area, which we've tagged it here. 2017, tagged it here. And the QE began in 2019, and then we wicked to it. We came back down for this fake out, and I believe as this looks like an oscillator, up, down, to the bottom of this range. That's what I'm seeing, and that'll be the time to start looking at altcoins. Before this happens, this will bottom before the USD pairs will bottom. Okay, so USD pairs will bottom a bit later on as we get an uptrend going into late the year. Okay, so I'll be buying altcoins once this becomes an uptrend and we see the money flowing from Bitcoin to the altcoin market. So you got to understand that. And this balance sheet, once it rolls back around, is also time to looking when the balance sheet starts rolling over. Okay, so I just showed you, that bled because of the balance sheet. Same QE happens in this green. What happened? The balance sheet went up, of course, and also did the dominance of total free, which is everything but Bitcoin and Ethereum. And we had QT here. What happened to the altcoins against Bitcoin and ETH? They went down. So it's the same thing, guys. Just the same. I'm just showing you over and over again, just to get in your head that others total free against Bitcoin, it's going to bleed back to Bitcoin. Okay, so that's my base case. Will I be wrong? Maybe, but you got to have a reason why, and we could really shoot higher. We could, this could last. This could be really quick, or could take in mid-year. Who knows what's going to happen? It's all about the Fed. When the Fed starts to pivot, like I mentioned with the balance sheet ticking back up, I want to see that, and I want to see, they have a calmer posture. Everything's under control. The unemployment rate's under control. Inflation, and then we'll have an alt season. At the moment, no. So yeah, we'll just finish up with the Bitcoin price and move the balance sheet there. And as you can see, we are really rising. I'll go on the daily. Had a huge move. Okay, we had a massive move from this wick down below to now 17% move, guys. This is quite large. From July 5th to now, 10 days, big rally. We've broken this level. So potentially we do have a resistance here at around 63K. If we break that aggressively, with a lot more, volume and aggression, you go up this, and then bang, we head back to the highs, and then we could have a left translated peak, as mentioned by Ben Cohen before, and we have shoot up like that, and a lot higher to higher levels, way up here, 100K-ish by the end of the year, and then probably not go that low, but we'll have the 2-year bear market or 3-year bear market. So if that happens sooner than expected, then it'll be the end for the fun. But I think Bitcoin will outperform on this left translated peak if we do have a peak at the end of this year compared to next year. I do think the Bitcoin dominance will just go higher and higher and higher. And just zoom out a little bit here. And you can see this, I've got this box drawn here where I think Bitcoin will be heading. And I'll go to the weekly. And I do think, depends on what the Fed does, okay, guys? This is a fib retracement from this peak here to the bottom at the 0.618. So it's 60% to 63 roughly. Okay, so that's my views. What I think about the dominance of Bitcoin versus the altcoin market, and where I see, where I see the risk heading. I don't see it in altcoins. I see it in either Bitcoin or back into the almighty dollar, into cash. People taking profits and going back into dollars to reserve their wealth. And we'll see. Have to see what this does, this move, and whether we hold or let's go to automatic or we break down. Okay, this is really deciding which way we go, up or down, and it'll be very telling what happens next. All right, guys, I hope you enjoyed this video of the crypto market, seeing where things are looking to head. There's Bitcoin versus the altcoins, and also looking at some other metrics like the cycle, a long-term 65 period cycle, and looking at the fear and greed. We're looking more optimistic now. Bitcoin's rallying, a big move above 60K again, and also at the Fed. It's all about what they do determines on where the direction the market goes. So follow what they do. What they say can be really unpredictable because they just sort of jawbone, talk up the markets, say they're doing a good job, saying they've got inflation under control, unemployment's at so much a record, historical, I should say, low. 4% is very low, but don't discount it. Don't think it's the job's done and they're going to start easing. It's not over yet, and they've mentioned that they've got a long way to go because it's still inflation is still sticky above 3%, and unemployment is starting to tick up pretty aggressively. So we have to keep track of it all. See if they stay the course, their restrictive policies, and their rates don't drop too soon. And because as Power did say, he doesn't want to make the same mistake as Fed Chairman Burns back in the 70s, which he cut too early and inflation took off. So don't make that same mistake again. He looks more into what Volcker did, but Volcker was the one who sort of rescued the inflation scenario. He had to come in and just jack up rates to 18% or so. It was really ridiculous back in the 80s, and he wants to be the one that controls it and does a good job and has a soft landing, which I don't think will happen. It'd be a hard landing. It just looks too uncertain. The yield curve inversion for 2 years is not good. The retail is starting to struggle. There's some other factors I'll talk about in other videos, but yeah, you can definitely look into it. But it's a Fed. The Fed's what you have to watch, all right, people? That's the way to determine where the market goes. It's their actions and the monetary policy, which will drive decision making and rational thinking into riskier plays like altcoins, which will have their time and it'll be quick. It'll be in and out. And next year, be just boom. Be just 6 months, just fun, and then just back over again, back to brutal bear market. So anyway, I hope you enjoyed this video. Please smash the like, comment your thoughts below, and subscribe to stay updated. And I'll catch you in the next one. Cheers.